Hey everyone, and welcome back. Today we're diving headfirst into the captivating world of market analysis. And trust me, things are getting interesting.
Oh, they definitely are.
We're taking you behind the scenes with insights straight from Nasdaq.com, comparing two titans of industry, Tesla and Microsoft. Now, what is everyone buzzing on Wall Street?
Well, get this. Analysts are giving a big thumbs up to Microsoft, slapping a buy recommendation on it with an expected 22% rise.
Wow, 22%. That's a hefty increase.
Right. But here's the twist. Tesla, on the other hand,
Uh-oh, I sense a plot twist coming.
they're actually facing a sell recommendation. Yep, analysts are predicting a 7% dip for the electric car giant.
That's quite a contrast, especially considering both companies are part of, what, the Magnificent Seven? I've heard whispers of this exclusive club.
They're like the A-listers of the S&P 500. You've got Apple, Microsoft, Amazon, the big leagues, NVIDIA, Alphabet, that's Google's parent company, by the way, Meta, and of course our very own Tesla. These 7 companies have been practically carrying the market's growth this year.
So being a part of the Magnificent Seven, that's the golden ticket, right?
You'd think so, but even within this elite group, there are high performers, and then there's everyone else. And right now, well, Microsoft and Tesla are showing us just how different 2 Magnificent Seven journeys can be.
Okay, so it's not enough to just be in the club. You got to play the game, right?
Yeah.
But before we get into the nitty-gritty, could you give us a quick rundown on what these analyst predictions actually mean? I mean, are they gazing into crystal balls or something?
Well, think of it more like being financial detectives. They're digging deep, looking at a company's financials, sussing out market trends, basically gathering every clue they can get their hands on.
Okay, so they're analyzing hard data to predict future stock performance, no crystal balls involved.
Exactly. From all that data, they come up with what we call a price target, their best guess on where they think a stock is headed.
A financial forecast of sorts, based on real-world evidence.
You got it. But here's the catch, and it's a big one. These are still educated guesses, not some foolproof fortune-telling. The market is a fickle beast, and those predictions, they don't always pan out the way we expect.
So with Microsoft and Tesla, why is Wall Street singing two very different tunes?
Well, let's start with Microsoft. They've basically built an empire on software. Think Office, Dynamics, Power BI, the tools businesses rely on day in and day out.
Oh, and don't forget Azure, their cloud platform. They're giving Amazon a serious run for its money.
You're telling me, but here's where it gets really interesting. Microsoft's going all in on AI. We're talking integrating it into almost every single product they offer. Think Microsoft 365 Copilot, for instance.
So it's not just about the cloud anymore. It's about making that cloud smarter.
Yeah, precisely. And businesses are eating it up. Why? Because AI means automation, efficiency. It's all about doing more with less. And that's a game changer.
Instead of manually crunching numbers, AI can handle those tasks, freeing up time and resources.
You've got it. It's no wonder they're attracting a ton of new customers, making their products even more essential. But hold on, it hasn't all been smooth sailing.
Ooh. Even tech giants have their hiccups.
Even giants stumble. Their acquisition of Activision, the video game company, that definitely threw a bit of a wrench in their earnings. Big moves like that always come with a price tag.
Makes sense. Even for a company as massive as Microsoft, there are going to be bumps in the road. But hey, that's business, right?
It is, and it's also why we do these deep dives, to figure out whether those bumps are just minor detours or signs of a bigger storm brewing.
Totally. All right, let's switch gears to Tesla. It seems they've had a bit of a rockier ride recently, haven't they?
Yeah, you could say that. It's been a bit of a roller coaster ride, especially with the economic climate we've got going on.
I imagine inflation and interest rates haven't exactly been their best friends.
You hit the nail on the head. With prices skyrocketing and interest rates through the roof, people are holding on to their wallets a little tighter, especially when it comes to big purchases.
And even though Tesla is leading the pack in the electric vehicle market, they're not immune to those economic pressures.
Not at all. To stay competitive, they've actually had to slash their prices. Now, that might sound great for consumers in the short term.
Sure, more affordable electric cars.
Right, but for Tesla, it eats into their profit margins, making it harder to keep those investors happy. We've even seen their market share dip slightly because of it.
Wow, so even Elon Musk feels the heat of the market.
Everyone feels it. But here's the thing about Tesla. They're not just content with selling electric cars. They're making big, bold bets on the future, and one of their biggest gambles is on autonomous driving, specifically their full self-driving software, or FSD, as they like to call it.
FSD, right. The holy grail of driving. Musk has been pretty vocal about how it's going to be revolutionary, completely changing the game for Tesla.
No doubt. They're already racking in cash from FSD subscriptions, and rumor has it that some major car manufacturers are considering licensing the technology.
So we might see Tesla's self-driving tech in cars from other companies. That would be a game changer.
It could be huge. Imagine Tesla transforming from just an electric car company into the go-to provider for the brains behind self-driving cars across the entire industry. But, and it's a big but, it's not a done deal.
Right, those self-driving cars still feel a little futuristic sometimes.
Exactly. The technology's still in development, and safety concerns are a major hurdle they need to overcome. It's a long road, and Tesla's got its work cut out for it.
So it's a bit of a balancing act, isn't it? They're dealing with these economic challenges while simultaneously pushing forward with these potentially game-changing technologies. It's hard to predict what the future holds for Tesla.
That's the million-dollar question. And to understand what Tesla might really be capable of, we need to talk about the power of data. Did you know that Tesla has collected a staggering 1.6 billion miles worth of data from their FSD software?
Wow, 1.6 billion?
Yeah.
That's like driving to the sun and back, several times over. But how does all that data translate into a real advantage? It's not like they're racking up frequent flyer miles.
Think of it this way. It's more like they're building the ultimate roadmap to the future of driving. That data. That's the fuel that powers the AI, the machine learning, all that fancy stuff that makes self-driving cars tick. The more real-world miles Tesla's cars drive themselves, the more situations they encounter, the smarter the AI becomes. It's all about teaching the system to handle anything and everything the road throws at it.
So it's not just about the sheer amount of data, it's about the quality of those miles driven, right? Like driving in circles in a parking lot isn't going to teach you much.
Exactly. You need variety, complexity, that unpredictable real-world experience to train a truly autonomous system. And that's where Tesla's data becomes incredibly valuable. They're amassing this massive library of driving scenarios, all those edge cases, those weird situations most drivers might encounter once in a blue moon. That's gold for their AI. It's a level of training and fine-tuning that other companies just can't match right now.
Sounds like they're building a pretty impressive lead in the self-driving race.
Yeah.
But is Wall Street convinced? Are they buying into this whole data-driven approach?
Well, that's where things get interesting. You see, even though Tesla's part of those Magnificent Seven, they've actually been the worst performer this year.
Really? I thought their data would have made them a Wall Street darling.
You'd think so, right? But remember those price cuts we talked about, the ones they made to stay competitive? Those cuts have squeezed their profits, and that makes some investors nervous.
So it's a classic case of short-term pain for potential long-term gain.
You got it. Some analysts are gung-ho about the long-term earning potential of FSD, but others are more cautious. They're not quite sold on how quickly Tesla can overcome those regulatory and technological hurdles we talked about earlier.
So it's a bit of a gamble. Some see dollar signs, while others see question marks.
Exactly. Investing in Tesla right now is like investing in a promising startup. Huge potential for a big payoff, but also a higher risk. You're betting on a vision of the future.
Now, on the flip side, we have Microsoft. And they seem to be playing the AI game a bit differently, wouldn't you say? It's not about gathering mountains of data from self-driving cars. It's more about seamlessly weaving AI into their existing lineup, right?
Absolutely. Microsoft's strategy is about making what they already do even better, smarter, slicker, and more user-friendly. They're all about enhancing that existing ecosystem.
So it's less about building something entirely new, like those self-driving cars, and more about fine-tuning that well-oiled machine they've already got.
Precisely. And a good example of this is their focus on gross margin. Now, bear with me for a second. It's not as boring as it sounds. Gross margin is essentially the profit a company makes after accounting for the cost of making their products. It's a measure of efficiency.
Gotcha. So the higher the gross margin, the more money they're making on each product they sell.
Exactly. Microsoft is looking to streamline their operations, cut down on costs, and ultimately boost that all-important gross margin.
A more understated approach maybe, but it could be incredibly powerful for their bottom line. They're using AI to make their business leaner and meaner.
You got it. And this difference in strategy, that's a key factor influencing how analysts view their long-term prospects. Tesla. They're all about disrupting the game, but that comes with uncertainty. Microsoft, they're the steady giant leveraging AI to fortify an already dominant position. That makes them a more predictable, arguably safer investment in the eyes of many.
Which is appealing in its own right. Microsoft has a knack for adapting and innovating within their established lanes. Look at their transition from packaged software to cloud computing. They nailed it. And now they're positioning themselves as frontrunners in the AI revolution. So we have two very different players on the field. Tesla, the bold innovator betting big on a self-driving future, and Microsoft, the pragmatic powerhouse using AI to refine an already winning formula.
And that's the beauty of the market. It offers a little something for everyone.
It's true. And for investors, it becomes a question of which path you believe in.
Exactly. Do you gravitate towards Tesla's high-risk, high-reward gamble, with its sights set on a world driven by autonomous vehicles? Or does Microsoft's more calculated approach to AI integration, building on its established strengths, feel like a more secure bet?
It's like choosing between an exhilarating roller coaster and a scenic train ride. Both can get you to your destination, but the experience couldn't be more different.
It really is. And much like choosing your preferred mode of travel, investing is a deeply personal decision. Your risk tolerance, your investment timeline, those are your compass and your map.
Totally. And it's important for our listeners to remember that these analyst predictions, as insightful as they are, they're not guarantees. It's like you said earlier, educated guesses, not certainties.
Exactly. Analysts are looking at the data, the trends, making informed projections about the future. But let's be real, the market, it's constantly changing. It's got a mind of its own sometimes, influenced by a million different factors.
So as with any good investment strategy, a little healthy skepticism and a lot of thorough research go a long way. It's your hard-earned money on the line after all.
Couldn't agree more. Don't get swept up in the hype. Take the time to really understand the companies you're considering, the industries they operate in, and, of course, the overall market conditions. Knowledge, my friend, is power.
Knowledge is power, especially when it comes to investing. Now, something that stood out to me throughout our deep dive is how differently Microsoft and Tesla approach data, even though it's such a crucial element for both of them.
It's fascinating, isn't it? It's like they're playing different games with the same set of building blocks.
Exactly. Microsoft, they're all about integrating AI into their existing framework, aiming for that streamlined efficiency, that constant enhancement. And then there's Tesla, building this treasure trove of driving data, going all in on a future driven by autonomous vehicles.
And that contrast really gets to the heart of what makes a company's long-term vision so important. It's about more than just the products they're selling today. It's about the future they're building towards.
So where do you stand? Do you see the bigger opportunity in Tesla's pursuit of a self-driving revolution, fueled by this massive amount of data they're collecting? Or does Microsoft's more calculated approach to AI integration strengthening their already impressive dominance resonate more strongly with you?
It's a tough call, and that's what makes the world of investing so captivating. There's no right or wrong answer, no one-size-fits-all solution.
Each investor has to weigh those potential risks and rewards, those long-term visions, and see what aligns best with their own financial goals and, of course, their appetite for risk.
Exactly. And on that note, as we wrap up our deep dive into these two powerhouses, Microsoft and Tesla, if there's one key takeaway I hope our listeners walk away with, it's investing is a journey of continuous learning.
Ooh, like that.
The market is constantly shifting, evolving, companies adapt, and new technologies emerge all the time. So stay curious, stay informed, and most importantly, make sure your decisions align with your personal financial goals.
Words of wisdom. Because it's not just about picking stocks, it's about understanding the forces shaping the future. And on that note, we'll leave you to ponder those possibilities. Until next time, keep exploring, keep learning, and happy investing.